successful funding show on LinkedIn Live, and we are streaming this morning. So let me introduce myself a little bit. I refer to myself as the capital coach. I would wear the hat, except that you couldn't see my face, which is not a bad thing, but it takes away from the conversation. My job in life is basically to help small businesses raise funding. It's my belief that innovation improvements in the world can occur best by helping small businesses get the capital they need to bring their innovations to market. And most small businesses don't know very much about raising capital. That's not their skill. It's not what they got into this all about. And so I try to help out however I can. And occasionally quite occasionally, I'll run into people who've been told the wrong thing, and we have to kind of get their heads on straight and move things forward. So that's part of what I want to do with this show is share information on raising capital. I'm inviting guests like my guest this morning, Devin Thorpe, who their own area of expertise. They're doing their own thing to help small businesses raise capital. And through this, hopefully everybody can learn a little something that they can take home and know of another resource that they can go to if they're either looking to invest or they're looking to um, get some help in raising capital. So with that, I'm going to introduce Devin now. Devin is the CEO and founder of SuperCrowd. This is an amazing group of people that is growing to become a larger group who is doing a number of things in the area of impact investing. And so we're going to define impact. We're going to define investing in the context of investment crowdfunding. So, Devin, with that, welcome to the show. Thank you for being here. And please just share a little bit about who you are and how you came to be in this place.
Well, it's a pleasure and a thrill to be here, Karl. You're a great friend, and it's great to connect with you here on your show. Thanks for having me. I am an old investment banker. Let's start there, since in a way that's the most relevant thing. So, for the better part of a decade, I ran an investment banking firm that I started. This was an SEC regulated FINRA member firm that I operated in Salt Lake City, and we primarily focused on helping people raise capital. We did some mergers and acquisitions work as well. And that gave me an opportunity to help a lot of people and learn a lot. One of the interesting things about my tenure as an investment banker is one of my very first clients was a crowdfunding site. Now, this was before crowdfunding was legal and under the current rules. And so the technology, the potential for this technology was clear. This is back in 1999 when this got started. And we could see how clearly the technology could be used to allow for what we now call crowdfunding. We didn't call it that then. And we started working on it. Now, that business didn't come together successfully. But later on, I did get in. I had another friend that started, again, what we would call a crowdfunding site, still before the rules and regulations came out. And I got involved with that, and put some money to work and lost it all in that deal. But I have had a real passion for crowdfunding and for helping entrepreneurs for a long time. I think of myself very much as an entrepreneur. I have started a number of businesses. Some of them I've sold, some of them we've just shut down. But I have been at this off and on with sometimes working for other folks throughout my career. Today at the SuperCrowd, we write and do a show kind of like this. We do a twice weekly streaming television show where we talk about these kinds of issues, generally speaking, always with the added layer of social impact. Um, and when we talk about social impact, we're talking about what are we talking about? We're talking about addressing things like climate change and social justice and poverty, global health and personal health and wellness. We're talking about supporting diverse founders. We're supporting women, LGBTQ founders. We're supporting uh, community builders, the small businesses that are operating in a community that are essential to the quality of life of a community, but that will never raise venture capital in that sense of the word. I love crowdfunding because it is such a naturally powerful tool for supporting all of these folks. And the work at the SuperCrowd is really intended primarily to help entrepreneurs. But we come at that desire to help entrepreneurs with a critical recognition, and that is it is hard to find investors. And the only way that we can make it easier for people to find investors is to increase the number. And under the rules of regulation crowdfunding, passed by a bipartisan bill in Congress in 2012, signed by President Obama, and enthusiastically expanded by President Trump's administration. The law is helping people, but the key that we see at the SuperCrowd is to grow the pool of investors, to help people understand how they can make money at this. And we can talk more about that, but that's a sufficient introduction
Well,
for me. Karl, thanks for having me.
yeah, no, what I want to say hello to our audience. One of the things that I like about this format on LinkedIn Live is that people can watch it as we're streaming. And like Laura, who is with us this morning, she has signed on board and she has shared her thoughts, reaching out, thanking Devin for some prior work with him. And I
Yeah.
work with Laura right now on her crowdfunding campaign. Hers is operating under a Colorado state law as opposed to the federal Reg CF law, which primarily means it's limited to residents of the state of Colorado. But it operates exactly the same way, where a person who's a small business, they can raise a lot of money, but they do it in small chunks. And this is one of the good things about crowdfunding, as Devin's talking about it. And I'm talking with Devin as a kindred spirit. I am totally in favor of crowdfunding in that it allows everybody to invest. It's not limited to the wealthy. It's not limited to that group called accredited investors. Anyone who is breathing, who's over the age of 18, can invest in crowdfunding. And that's not to say that it's for everyone, or that every deal is a good investment, or there's a good match between every deal and every person. But it's a form of freedom. It's been called the democratization of the capital industry. And it was created back in 2012, basically in response to the Great Recession, when the government recognized that it needed entrepreneurs to create new jobs, and those entrepreneurs didn't have the capital they needed. And all the big money, the institutional money, all the usual money had got itself all wrapped around an axle. That's a phrase from back on the farm where we had that problem occasionally. And um, and the money wasn't free. It wasn't coming into the market. So there was finally some wisdom, I will call it, that showed up that said we need to do something, and we should be more fair. We should open up the capital industry to everybody. And so they passed legislation in 2012, and everybody was excited. And we were talking about $1 trillion a year moving from Wall Street to Main Street, where everybody would have a chance to participate and do that. But let's just say that change in government is slow, and it took 4 years for the SEC to finally get their rules together and make this all legal. And all of us who were cheering and supporting and applauding when the original Jobs Act passed in 2012 got a little frustrated. And at that time, about 22 different states, like Colorado, passed their own laws so they could get going and not wait for the feds to finally show up. And I worked with a group here in the state of Colorado with Colorado Division of Securities and some lawyers and some other people. And we got it done. And I can't say that it was a beautiful result. Every year for 4 years, we were out there tweaking the law, trying to make it easier and easier and easier, and get rid of the bureaucracy and the strangeness that had nothing to do with what we were trying to do. And and Laura's company, Greens Gone Wild. This is a plug for Laura and her protein food bars. I'll just hold that up where everybody can see it. And they are working under the most recent change we made to that law. We basically stripped out all the requirements for a raise of $500,000 or less because it was too easy under the old law for the cost and the burden, administration and paperwork just to make it unfeasible to go raise money in any small amounts. And that's really where we needed the money. There's still 15, 20, 100 other ways to raise money over $500,000. But under $500,000, it gets really, really hard. And so I really like the fact that we have crowdfunding. And what Devin's doing is basically saying, but we're doing it from the context of impact. So Devin, I want you to, at this time, just give me, what impact means to you different from the average Joe type of investment.
Well, I think most of us have a little bit of a desire to make the world better. And what I think many people don't appreciate is how easy it is to make the world a better place with our investments. And crowdfunding enables that in such a direct and powerful way. And what Laura is doing is a profoundly good example, right? And there are three levels on which this is a high impact opportunity. So let's talk about the three levels. First off, this is a small business in a community, right? So if you live anywhere near her, you could say to yourself, I want my community to thrive. I want there to be more employers here in my community. I want business here. And I like this business. Well, that's a form of impact, right? To support your own community. In fact, it's profoundly important. You think about communities around the country that suffer from struggling economies, and you see main streets with boarded up businesses. And my heavens, I lived in downtown Salt Lake City, and I experienced that firsthand. I saw closed up shops that were sometimes closed either off and on consistently over 20 years or for many years at a time. We can all benefit from having better, stronger, more thriving communities in the places where we live. Okay, so that's one kind of social impact. And I think all of us, who doesn't want a stronger local economy? I mean, I don't think there's anybody, right? So 100% of us want that. So if we decide we want to have social impact, we can start there where we can all agree. Now let's talk a little bit else. Laura's business also has two other aspects of social impact in the business design, right? The intention of the business is to create clean, healthy food, right? And so this is food that is intended to make you healthier, right? These are healthy snacks that if you replace your Snickers bar with one of her bars, you are going to become, over time, a healthier person. Now, it's not going to cure cancer, but quite frankly, the goal I think that she has is to make sure that you reduce your chances of getting cancer, that at the margins, you become a genuinely healthier person. That's kind of an exciting thing to be thinking about, right? So she's got that aspect of social impact. Another, she's building her bars. Her products are all vegan. And you may not be excited about that. That's okay. But the reality is that a vegan product has two key things that many people can get excited about, even if you can't get excited about a vegan diet. And one is that, of course, no animals suffer, right? So there, she doesn't in any way with her products contribute to the suffering of animals. And even if you love meat, you may say to yourself, golly, I kind of don't like animals suffering. Okay, so there's that. And then we get the benefit of climate change, right? We sometimes don't connect these dots, but animal agriculture contributes significantly to climate change. And okay, if you don't get excited about climate change, then just ignore this part. But a lot of us do. A lot of us care deeply about climate change and see its problems right now. Uh, this morning, I'm in California. California, many parts are under a state of emergency because of this atmospheric river, which is a direct result of climate change. Because as the planet warms, the atmosphere holds more water. And so that we get these phenomenal, these events, these phenomenons that we now call atmospheric rivers that dump tons and tons of water. And so there's been tremendous flooding in Los Angeles, and the storm has done tremendous damage in my community and elsewhere. So this is really a problem. Okay, now, so we've been talking about Laura's impact on that front. Let me go one deeper, right? So now we've got Laura is a woman. You may have picked this up. You may have figured this out. But as a woman entrepreneur, the reality is the data is really clear. Women are starting businesses at a very similar rate to men, but they are not accessing capital in a way that is comparable to white men. It's a travesty. In the venture capital arena, we can argue about how much they're getting, but the data is clear. It's on the order of 2%. It's on the order of 2%. And women make up a much larger percentage of venture eligible businesses, and again, nearly half of all businesses. So they're just getting the shaft. And we see that that's true as well in other forms of capital, except crowdfunding. Crowdfunding tends to be the place where women have the best access to capital. Now, it may not yet be fully fair to women. And so, even though it's the best, it's not perfect. And part of the reason I think that is that so much money is still controlled by men. And so I want to call on men who are investors to be deliberate about looking at businesses run by women and other diverse founders, because our tendency, our natural human tendency, is to invest in people like ourselves, and it makes us more comfortable. And I want you to just make a deliberate decision to say, I'm going to look at businesses founded by people who are not like me. I'll let you decide how you decide, what to invest in. You've got to do your due diligence. You've got to screen deals carefully. You can't be casual about your money, and we could talk about why it's important. I'd love to come back to that topic, Karl, and talk about why it's important to make money on your investments. But let me just leave it here that we, as especially as white men like you and I are, Karl, we need to be looking deliberately to support women and other diverse founders. Okay, so look at all those layers of impact. Holy cow, there's a lot there, right? So we have a local business, we have a vegan business, we have a healthy business, and we have a woman founded business. Just layers and layers of impact right there in one example that you helped create, and that, Laura's watching the show live right now as we're talking about this. That's how easy it is to find impact. It's just right there in front of us. Okay, sorry, I went on for a long time, but there's a lot there. There's a lot there, Karl.
Yeah, there's a lot there. I could see 3 or 4 more shows in the future where we dive down on some of these individual things because
Yeah.
they're all
Yeah.
very important. And we have with us in the audience today Zen. Zen has raised the question, what's the difference between a for-profit and a public charity who are both doing good work and both can generate income. So what's the difference? And this is something that actually comes up to me quite frequently because people go, well, what's the purpose of a charity? And I usually knee jerk responses, charity's supposed to fix all the things we forgot to fix. But I did a stint as an endowed chair in a Jesuit university. And one of the lessons that the Jesuits taught were very practical, pragmatic in their approach to life. Was a story about a new a novitiate who was working at a charity hospital, and some person came to the door who needed health care, and they were told they had to pay a fee, and if they didn't pay a fee, they were going to be turned away. And this novice was offended. She says, "Well, we're a charity. We're supposed to be doing good." So she goes to the head nun and she asks the question, "What's the deal?" And the head nun said, no margin, no mission. And the point there is that everything costs, whether you're a for profit or a nonprofit. And the real question is, where's your money come from? Is it coming from income or is it coming from donations? There are some perfectly wonderfully run charities that generate all the revenue they need to continue to keep their doors open till tomorrow, which is a sustainability index or feasibility index. There are some that are dependent upon donations. And so they go out and they raise money through charity contributions in order to fill the gap in their budget so they can still be here tomorrow. So at the end of the day, it isn't the amount of good that a for-profit or a charity is doing. It has more to do with where does their money come from? Are they able to generate enough revenue that they could be a business, they could be a for-profit business, or is it something where they need people to reach into their pockets and fill the gaps in their budget with something that comes from charity because they're doing something that you can't monetize? And I'm always open to challenges about stuff you can't monetize. So we'll set that aside for another day. But Zen, thank you for that question. I think that is something that everybody wants to look at, but I'm kind of on the question of why would a business not not be doing something impactful? Why would it not be helping its community? It helps its community by its very existence. Devin, you did a great job of working through all these different things about how just the existence of the businesses there, it's creating jobs. It is paying local taxes. The people participate in local charities and community organizations. They buy products and services within the community. A community is not a community without some businesses in it. And we are faced today with a problem where we are seeing a lot of small businesses disappear. I just started working with the Atticus group in Pennsylvania, who is trying to find boomer businesses that have no succession plan in place. And if something doesn't change, these businesses are going to disappear from these communities. And so they're putting together systems and so forth to try to keep these businesses going, keep the jobs in place, because if these businesses go, the community may go with them. And that would be a terrible tragedy unto itself. So it's an interesting thing to talk about business and charity and so forth. But one other thing I want to talk about a little bit because it's an evolving story right now. But when we designed the capital campaign for Laura's company, we were taking advantage of the crowdfunding laws, which allow us to go out and raise money from everybody. But there's, in my mind, and this is something Devin and I have talked about, is that everybody doesn't consider themselves an investor. In fact, some people, if you start the conversation with the word investor or investment, it's like turning their brain off and they disappear altogether at that point. because they don't understand the power that they hold to do great good simply by investing in a local business. And so it's an ongoing challenge for everybody who's working with impact investing and Devin's group to try to get people to understand that you can do so much good with a $100 investment. It's almost beyond understanding comprehension how much good you can do with just a little amount of money. And so with Laura's group, we packaged everything up for $100 investments because we wanted everybody to be able to participate. It used to be that a non-accredited, non-wealthy person could invest in a private offering, but because everybody was so concerned about raising their capital, they would set the minimum investment around $25,000, which the average person can't afford. And so they were practically held out, even though legally there was a been able to participate there. But in investing in a small business is risky. And I got into a long conversation on this with a guy yesterday, and we haven't finished that conversation because we have a little bit of a disagreement. That if you invest in a small business, it's high risk. I mean, there's just no way around it. They're small. There's a few people. There's not a lot of momentum. They may be a startup. Their product may be new. The market may not have accepted it, and the market may do strange things like COVID or inflation or higher interest rates that can just kill a business in a heartbeat. And so, as we're designing, as I design, in particular, crowdfunding packages, I put in products that are, targeted to the customers of the business. I don't worry about angel investors and wealthy people. In fact, I think that's a quick way to structure the deal wrong. And we could go hours on that discussion. But in Laura's deal, if you put in $100, you get $50 worth of product. And if that's all you got, you paid twice as much for the product as the sticker price. But we also give away $100 of discounts on future purchases, which means you can get all your money back and you've got $50 of free product. But no, we're not done there. This is like the Popeil pocket fisherman type of advertisement. Yeah. We put in there also that you get stock in the company. And if this company is successful over the next several years, that stock may grow in value a little or a lot. We don't know. And this was the point of the discussion yesterday was, well, what's the valuation? I go, how would I know? I can't. I have a crystal ball. It's not as good. It's not that good. I have proven that over 45 years. It's just not that good. So where are we going to go? But the fun thing was when we designed this, we set aside $25 of gifts of Laura's products to a charity. And at that time, we didn't have a particular charity in mind, but I always believe that businesses should adopt one or two charities. This is another way of having strong impact. And I like for those relationships to be as tight and interwoven as possible. So the brand of the charity and the brand of the business are almost interchangeable. So anyway, we started looking around, talking to charities, and I had one obviously that was close to me because my wife runs a camp for kids with pediatric cancer, and just out of the blue, I go, well, I know that when they're under chemo treatment or other type of treatment, that sometimes there's dietary issues. So we raised the question: would a protein bar work with children who are under treatment for cancer? And the answer came back, oh, absolutely. In fact, they can eat so little when they're under treatment that we go to a high protein diet, and this would be a perfect thing to put into their diet. And we're like, oh, wow, here's a whole market that we never knew about. And by doing good, we found out about it. And so we're now working for Laura's company to be a corporate sponsor of the charity, and everybody's going to come out of this in a win-win-win scenario. And so you'll see in a lot of the campaigns I designed, there's always a charity element, and it may be one that the company's already working with, or it may be a brand new relationship. But it also brings a new crowd, a new group of people who can see the direct impact that occurs, and it makes it easier for them to get behind that particular thing. And then if they love protein bars, and Laura's are pretty tasty, that's a personal opinion of mine, it doesn't taste like shoe leather. Not to say that I dislike other protein bars, but I do. This is all good. Devin, you and I have talked about this topic. People don't think of themselves as investors. And I know you're building a crowd of investors and you're doing it with the impact hat. What are your challenges on getting that message out there? How do you get investors to look at a small business and understand that they can put on their own white hat if they go out and support that local business?
Yeah, one of the fun things with our most active part of the super crowd is our Impact Cherubs Club that you're a part of, and we get together and we've really become really thoughtful about investing, and it's really working, right? Uh, and so this is the key message I'm sharing, and I'm just trying to emphasize this over and over again. One is that you can make money doing this, and two is that you should make money doing this. And uh, let me talk first briefly about you can, right? You talked about the Laura's business again, right? And you talked about how you can get your money back plus just on product savings. Um, that's great. That in that case, what you get from the equity investment in that business is entirely profit, right? Because you've really got all of your money back with product. So it's easy to see in that scenario how it almost doesn't matter what the valuation is, because if you got 10 cents on the dollar back from the investment side of things, that's pure profit. You already got your money back from the product and the product savings. Okay, so you can make money on these deals. There are a couple of platforms that I get really excited about. SMBX, which is the name of the company. Their website is thesmbx.com, and honeycombcredit.com. These two offer almost exclusively debt. SMBX is religious about it, only debt. Honeycomb Credit did one or two equity offerings. And I think they're going to step away from that. I think they're going to go back to their core on debt. But here's the thing, right? If you are looking at loans that are paying 10, 11, 12, 13% interest, that's pretty good. Now, you're saying to yourself, well, I'm getting 2% in the bank, so yeah, that's pretty good. I want you to use a different benchmark, right? The fact is, a stock market investment, which is really for ordinary investors like me, right? The best we can do is the stock market. That is the highest return we can achieve. Let me put this into perspective. On the long haul, it's been true for decades. Over the long haul, the return of the stock market is 10%. That's if you are investing broadly in the stock market. Now, there are stories of individuals who beat that, but the number of people who beat that consistently is so small, it does not exceed the number you would expect from a random selection, right? Even though there are money managers out there who have done it, right? You would expect that if a million money managers tried to beat the market, a few would year after year, just randomly, right? So okay, so I'm trying to be faster. Okay, so you put money in the stock market, you get 10%. That's the deal. 10% over the long haul. That's what you get. Yes, there are years that are much better than that, but let's remember there are years that are much worse. And from 2007 to 2009, people lost almost 60% of their money in the stock market. It is a risky place to get your 10%. Okay, so let's compare that to lending money to small businesses at 10, 11, 12, 13% interest. Yes, some of those businesses will go out of business and they will not pay you back. How is that different from losing 60% in the stock market over 2 years? It isn't. It's the same kind of dynamic, right? So the risk of lending to small businesses is very comparable to the stock market, very comparable. And your net return over the long haul, approaching 10%, is easy to achieve. And let's be clear. When you and I invest in the stock market, most of us don't get the 10%. We either pay a money manager to get us close to the 10%. After we pay him, we can't quite get there, right? But we get close because we're paying someone who's a professional. If we choose to do it ourselves, we make mistakes and we don't quite get there. And some of us really missed, right? We get too enthusiastic about electric cars, and then our portfolio suffers, right? So there are things happen, right? So you can easily meet the market, the stock market returns, and risk profile in small business investments. So we can do it. Now, why should you do it? Here's the thing. The reason you should do it is, first of all, if you become, after some practice, research, and deliberate effort, if you become convinced that you can really make the same kind of money through crowdfunding that you can make through your conventional investing, then you could move some of your money, whether that's $10,000 or $100,000, that you can move into the crowdfunding space with an impact objective. And holy cow, the game is changing, right? If you're talking about moving 5 figures, 6 figures of money instead of just $100 at a time, the game has changed, right? That's why, that's the first reason why it's really important to make money from your impact crowdfunding investments, because you can't move real money until you really know you can make money in the stock market. You have to figure out how to do it. Okay. The second reason why it's important to make money is that if you are investing money and getting money back, then you can keep doing this forever, right? Your impact will continue as long as you are successfully investing, right? If you continue to find businesses like Laura's, invest in them and get money back and do it over and over again, shebang, 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 every time you're having impact. So infinite, what we're really talking about is having infinite impact if you can make money on your investments that have impact. Okay, third reason to make money is this. If you invest in a business that tanks, it goes out of business and fails, not only did you not get your money back, and not only does that mean that you can't get a return on, you can't repeat that investment, that amount of money is gone. It also means that that business didn't have any impact, right? If they went out of business, I'm sorry, help me understand, what was the impact? Now, it will happen, right? If you're investing through crowdfunding in small businesses, some of them will go out of business. That's part of the experience. And you've got to build a portfolio. We can talk about portfolio construction and diversification. But the key is, if you have it happen less often, right, then you can make more money and have more impact. So there are 3 layers of reasons why it's important for you to make money, and all of them drive impact. It isn't just about making money. You can make money by keeping your money in the stock market. You cannot have the impact in the stock market that you can have in direct investments through crowdfunding. When you invest in Tesla, right, in the stock market, Elon Musk doesn't get the money to run Tesla. BlackRock gets the money because they just sold some shares of Tesla. How does that's not impact? You can't argue that's impact. It may align your portfolio with your values, which would be an important thing, but it does not have impact. Investing in Laura's business has impact. Okay, I've been rambling too long. That's my pitch for why it's important to make money and to know that you can make money in this space.
Yeah, so you make an observation, and I actually got thrown out of a social impact meeting once for trying to explain what you were just talking about. But when a company sells their stock originally, it's called in the capital industry original issue, which means that the money goes from the investor to the company. That's the only time that the company is seeing that money, is when it comes to them. When you buy stock in the stock market, it's buying it from a person who already holds the stock, and they're selling it across to another person. that money doesn't go to the company. It has no impact on the company. It basically, it's making money between the buyer and seller, maybe. It's definitely making money for the brokers who are all making commissions whether the stock is going up or down. But I was in a meeting where people were talking about boycotting a particular company because they thought it was engaged in bad practices. And I was just trying to bring to the attention of the audience, are you buying the stock in an original issue? Because if you boycott an original issue, then you are impacting that company. But if you're just buying it off the stock market, you're too late. That ship has already sailed, and you're not having any impact at all, except maybe thinking you're feeling good, but you're not really doing anything. And the broker sold you a different stock, so they still made their commission, and you've got your stock in something you're happier with because you think this is a better company. Good for you, but you're not impacting that company. So here, as Devin's talking about, we're talking about original issue. This is the original sale of equity, ownership, however it's structured, a loan, debt, whatever, in a company. And so you have the ability to have very direct, specific impact on those companies. Now, Devin, there's so many things I want to talk to you about today, so we're not going to get through everything. But Devin runs I believe it's the Impact Cherub Club. Is that the right name? And this is basically an investment club where he has an approach or methodology to what he's doing. It's not random. It's very methodical, and it makes the most sense to me out of any crowdfunding investment program I've seen. So I'm a big fan, and I've participated. Some, not as much as I want, but we'll get it there someday. But Devin basically treats investing like a savings account. And he'll correct me when I state this wrong, but every month you take so much money, just like you would put money into a savings account, but instead of putting it into a bank and getting interest and having other questions about if that bank is doing anything in your backyard or not, invest in a small business. And so over time, you're getting what they call the diversity of a portfolio. You've got multiple irons in the fire. One may fail, but 10, 20 of them, 30 of them over time may succeed. And so in the net average, you're going to get a return that is equivalent to Wall Street or better than investing in your house or any other investments that are out there. But you have made an impact, direct impact in all these businesses and all the communities where these businesses exist. And anyone who's employed by the business, any government that taxes that business, they're all benefiting from that. If you sat down and drew a chart of all the people who benefit from your investment, you're going to have a pretty warm feeling in your heart by the end of the day.
Yeah, it really is just a cool thing. And we have so much fun with the club. And you've been a great active member. We're thrilled to have you, Karl. But, one of the key things is I would tell people, everyone's welcome at the Impact Cherub Club. Come check it out. We charge zero fees. We don't enforce investment rules, right? And I don't touch the money. When you invest, you don't give the money to me to invest. You just invest it for your own account with the company. Usually it's through a portal. So you're going to go to someplace like WeFunder or your portal there, and you're going to make an investment. You'll keep track of it. You'll get the dividends if there are dividends. You'll get the proceeds when they sell the company, if they sell the company. You'll get the notification if they go out of business, if that's what happens. It all happens for your account. I don't take any fees. I don't touch the money. We just do this because when we share the load of doing the due diligence, we get the benefit of hours of time spent without spending all of that time ourselves. Plus, we get the perspective of a group of people who are all looking at the same investment, scrutinizing it from their own standpoint. And it's been dramatic to watch the shift of the group over the last 2 years since we started. When we started, we approved every deal for a long time. Right? it took months for us to finally reject a deal, because we'd look and we'd see an entrepreneur like Laura and we'd say, oh, well, she's doing such great work, and the bars look so tasty. We'll invest, it'll be great, right? But what's happened over time is we've become a little more disciplined, and we've started to look at, okay, now how's she going to pay us back? How does this really work? Does she have the right corporate structure? And is she set up deal terms that make sense? And we're really starting to scrutinize the deal to make sure that this all works. And so we're now approving only about a quarter of the deals we look at, and we're screening the deals before we look at them officially. We look at them informally. So there are layers and layers of screening going on before we choose a company to invest in. And so I'm really optimistic that our investment choices are getting really good. And I've got to say, let me just add one last thing, Karl, on this topic. But the club, one of the earliest investments was in a company. I'm sure we all invested just because we thought, well, it's a good cause, good impact. But right after the U.S. pulled out of Afghanistan, in that painful moment, there a company that was operating exclusively in Afghanistan, producing its product for sale in the United States, was just in a panic trying to raise capital. So they raised capital on WeFunder, and it was just a desperate plea for help, is really all it was. They didn't really make any pretense that they would be able to pay us back. And so I think we all just thought that was spent money, but I've kept track. The company sold its product on Amazon, and so from time to time I would buy some product off Amazon and eat their delicious snacks. It was mostly nuts, that kind of thing, that they would harvest and package in Afghanistan. And the goal was to employ women in Afghanistan, right? Because Afghanistan, they don't get jobs. Women are excluded from the economy. It's a terrible, difficult place under the Taliban to be a woman. And so they're trying to kind of subversively support women through this. Last month, I got a check, right? They paid it off. They paid off the investment. I got a 24% return on my money in that deal. And I was just like, holy cow. I'm actually making money with the zero screening, for the potential to make money. And, I never thought I would see money back on that one. And so I was just thrilled that it was a convertible note and they paid it off. So anyway.
Yeah, so Laura's been listening in. Her ears are certainly burning as we talk about her repeatedly throughout today's show. But I'm working with two other crowdfunding campaigns currently. One's a Reg CF that is on the Silicon Prairie platform. And then the other one just started Friday. It's a coffee company in the Boulder area that's taking medicinal mushrooms and infusing them into the coffee. So the coffee is even healthier for you than it would be ordinarily. And all these companies have their own story. They're all unique. And at the same time, as I see it, particularly with crowdfunding, we need to be focused on the average person, who could be an investor, who doesn't think of themselves as an investor. And it's going to be an ongoing challenge to get people to go, oh, I can empower this business. I can do good in my community. And this is a new vehicle that allows me to do that. I just see that this is going to be a long haul type of proposition. But nonetheless, we've got the Impact Cherub Club, and we have educational programs, other things going on. There's other groups out there who, like Devin and I, think that we really want local money investing in the communities themselves. So we've got the National Center for Community Capital that are doing things with investment funds. There's so many different things out there that are just kind of coming into existence that are essentially enabled by crowdfunding. If it weren't for crowdfunding, none of these groups would be able to do something. You'd continue to see the gaps between these huge projects and nobody else. We've got a big gap to fill here as we work on this. And Laura was kind enough to point out that we have way too much content for a single show. So we're going to
I
have
agree.
Devin come back, and Harvey was asking about explaining how original issue works, and I think that's a good program. So we'll get a person who works with small businesses and explain the steps that one of the ways a small business can raise money. It's an alternative approach to crowdfunding. Is they engage a broker or a brokerage firm to help them raise money, and they pay them a fee for the services they provide. And I know a lot of brokers. I enjoy working with them when I can, but the problem we get into is the brokers have to make money. They're in a for-profit business. And a small business with a small offering won't generate enough commissions to pay for all the costs that these brokers have to incur, particularly with regard to compliance with all the regulations. So it isn't that they don't want to help, but there's essentially the door has been shut on them because if they have to meet all the regs, then there's no way to make any money. And so we're using crowdfunding to fill this massive gap. And I thought the original prediction by a writer in The Economist that we could get up to $1 trillion a year in crowdfunding investment was a very reasonable dollar amount because it only represented 1% of all the money that's currently traded on an annual basis on Wall Street. And to move that money from Wall Street to Main Street was and still remains my vision, and I'm sure that shared with Devin, that we want to enable all these businesses to do what they do. Businesses are more agile. They create the jobs. They create jobs that other people can't do. They're the largest source of jobs. And so it's very important that we, in effect, continue to provide an environment where they have access to enough money, different capital, that they can be what they are. And they will take care of it from there. I'm not going to tell them how to run their business, although I do my part. I'm what I refer to myself as a parallel entrepreneur because I've got my hands in half a dozen businesses, and then Devin's talked me into investing into about another half dozen over that. So it's always a free for all in my office. But Devin, what would you say to someone who's never been exposed to this before? You just pulled the curtain off of this, and they're looking at this and going, "What? What are you talking about?" What would be that first statement you would try to do to get somebody to take a second look at this and get engaged?
Yeah, well, I think that's a great question. Let me answer the second part of Harvey's question. The way the guys make money at the end of Trading Places, which is one of my all-time favorite movies, is they sell the orange futures short at a high price. So they sold them first at $139 per unit, and then they bought them back cheap after the truth came out and everything was fine at $39 per unit. So they made $100 per unit profit and wiped out the bad guys in the process. So that's how they made their money, Harvey. It's complicated. I actually had a class on that in graduate school. It was so complicated. So you're wise to ask about it because it's really sophisticated. Okay, so how do you get people to pay attention? The key thing I want to tell people is you can make money doing this. I want to just say that over and over again. You can have impact. We all want to have impact. The reason we don't do this, we think we can't make money. You can make money doing this. And when you make money doing this, you can always choose to selectively make donations. You can choose selectively to invest at lower rates of return because the impact is so high or it's for a friend. But if you are making money with the core of your portfolio, you get all kinds of flexibility, and you can make money with impact crowdfunding. That is my message.
I think that's pretty clear. So there's so many
My
things we
book
could
on this
talk about.
topic will be out in March.
Yes. Well, the couple things I want to do, kind of housekeeping as we move forward, is this show. This is the third show that I've produced, and I'm going to be doing this every Tuesday morning at 8 o'clock Mountain Standard Time. And going forward, and with the tutelage of Don Cohen and Kelly Stanicky and Harvey Tuck, who's been on the show with us this morning, they're mentoring me on how to do this. So if you like today's show, I can promise you that in another couple months, the show will be better because I am still learning about everything that's behind the scenes, in front of the scenes. But the easiest thing I can share with any of you who are thinking about doing your own show is go out and get a guest like Devin, who's a great guest, because it makes the entire show happen. So there's that. I'm also doing a daily newsletter. I'm trying to share little insights I've gained over my 45 years of working with hundreds of businesses and raising capital. It's called Instant Funding. You can find it under my profile on LinkedIn, and it's free, just like this show is free. And there's no greater value you're going to find today than this show, except for maybe my newsletter. But in my newsletter, I've been doing a series on crowdfunding, investment crowdfunding, about who invests and why they invest and how you communicate your story to them. And that's going to be going on for a while because I'm using Laura's crowdfunding campaign as an illustration so we can get into the weeds where most people don't go. And we can talk about all the intricacies and the nuances that are very, very important to a successful crowdfunding campaign. And occasionally I will point out where I kind of differ from a lot of other people who do crowdfunding. I'm a little bit to the side. I think there's different ways of doing that. But some of you have asked me about, well, where can I learn more? So I have decided to repeat my half-day workshop on raising capital. It's called the Motivated Money Half-Day Workshop. It'll be on February the 29th from 9 a.m. to 1 p.m. on that date. And there'll be information online and in my newsletter on where you can find out information about that. So there's other things coming. I'm working on. I'm going to be speaking at a number of Founded in FOCO on March 8th, which is the Fort Collins Startup Week. I'm a guest on a lot of podcasts and always happy to be a guest if anybody's interested. But trying to get the word out, because the kind of program we're putting on today, to me, I want to share it everywhere. So feel free to invite all of your friends. And when this show's over, it'll show up in my LinkedIn post and people can watch it repeatedly. For those of you who enjoy this program so much, just watch it instead of whatever's on TV, because you'll learn more. Actually, each time you watch it, because there's certain things that are not so obvious first time through, but that's going to wrap it up for today. So, Devin, I really appreciate your being a guest, and I really want to thank everybody in the audience that has been with us today for this show. And thank you for your questions and your comments. And Zen, you had several comments in here, and I couldn't get to them all. So we're going to try to get to some more of those in the future. And use those to frame what the content of future shows will be about and who I invite to be a guest, because this is really, really about what you guys are doing. And it's to help you guys either as an investor to invest in the small businesses and help your communities and help these businesses. But if you're a small business and understanding the mindset, where's the investor coming from, the concerns that they have about investing because they've been kind of taught and trained that you can only do it on Wall Street. This is stepping out. This is making these people do something new, something different, and that's hard for them along the way. So be kind to them as you talk to them about investment, and acknowledge that this is not a guaranteed, wealth-making thing, but you can build wealth over time. incrementally, one step at a time. I think if you take that approach and understand how much each small business is a critical component of your community, I think you're in the right place to start looking at crowdfunding and considering different deals. So, Devin, last thoughts.
Well, it's been an honor to be with you, and I'm grateful for the opportunity. People can read my newsletter at superpowersforgood.com. The 4 is a number 4. You can sign up to attend our monthly webinars at thesupercrowd.com. Karl was a guest last month. We have a great program every month. We also are hosting regional events this year in Baltimore, Chicago, and Salt Lake City. We also are holding, and Karl will be speaking at SuperCrowd 24. It's a 2-day virtual conference for everyone in the country. I'm hoping that we'll have almost 300 million people there. We'll see. It'll be great. A lot of people will come to hear Karl, I'm sure. That'll be April 17th and 18th. Again, you can register at thesupercrowd.com.
Thank you, Devin. Yeah, thank you for all the work you're doing. I think you're an impressive champion for crowdfunding and particularly for impact crowdfunding. And I'm certainly going to have you back as a guest because we have 3 or 4 more topics we need to go down deep on. Okay. So thank you, everyone, for attending today. We'll see you next Tuesday.